Welcome back to the channel. Today we're diving into a topic that gets a lot of you fired up, making money and making it fast. We're talking about the 10 most aggressive ways to build wealth out there. But, and this is a big but, remember the golden rule, with high rewards come high risks. We're gonna break down each of these methods, talk about their potential, and crucially, lay out the risks involved. Because let's be real, nobody wants to end up losing their shirt chasing a quick buck. So, buckle up, hit that like button to help the algorithm, and let's get into the 10 most aggressive ways to make money and the risks you absolutely need to know about. Day trading. It's the financial equivalent of riding a roller coaster blindfolded. You might get lucky and make a killing, but you're more likely to end up with a face full of dirt. The allure is obvious: buy low, sell high, all within a single trading day. But here's the reality. Day trading is incredibly volatile. Unless you've got nerves of steel and a deep understanding of technical analysis, you're essentially gambling with your money. We've all seen the shows: buy a rundown house, slap on some paint, and sell it for a massive profit. Real estate flipping can seem like a gold mine, but it's not as easy as it looks on TV. You need capital, time, and there's always risk. Unexpected repairs, market downturns, or bad luck can wipe out profits. Real estate flipping is a business, not a hobby. It requires knowledge, experience, and hustle. The bright lights, the clattering chips, the adrenaline rush of a big hand. High-stakes poker has a certain allure, and for a select few, it's a legitimate way to make a living. But for every poker pro living the high life, there are countless others who've lost it all at the table. Let's be clear. High-stakes poker is not gambling. It's a skill-based game that requires strategy, discipline, and an almost superhuman ability to read people. But even the best players in the world know that luck plays a role. The risks are real: financial ruin, addiction, and the psychological toll of such high-pressure situations. And let's not forget the physical risks. Spending hours on end sitting at a table can take a toll on your health. So, before you go all in with your life savings, remember, high-stakes poker is a tough way to make a living. It's a grind, it's stressful, and it's not for the faint of heart. Cryptocurrency. It's the Wild West of finance, a decentralized digital frontier where fortunes can be made and lost overnight. We've all heard the stories of early Bitcoin adopters becoming millionaires, and it's tempting to think you could be next. But here's the thing. Cryptocurrency is incredibly volatile. The market is driven by speculation, hype, and let's be honest, a healthy dose of FOMO. 1 minute you're up, the next you're down, and it can be tough to stomach the swings. And let's not forget the risks, scams, hacks, and the ever-present threat of regulation. Plus, the technology itself can be complex and confusing, making it easy to make costly mistakes. So, before you mortgage your house to buy Bitcoin, remember, cryptocurrency is a high-risk, high-reward game. It's essential to do your research, understand the technology, and only invest what you can afford to lose. High-pressure sales, the land of six-figure commissions, cutthroat competition, and the constant pressure to close the next deal. It's not for everyone, but for those who thrive on the thrill of the chase, it can be a lucrative career path. But here's the catch: high-pressure sales can be incredibly demanding. Long hours, constant rejection, and the pressure to meet quotas can take a toll on your mental and physical health. And let's not forget the ethical considerations. While there are plenty of ethical salespeople out there, the industry has a reputation for shady tactics and pushy salespeople who prioritize commissions over customer needs. So before you jump into the world of high-pressure sales, remember, it's not just about closing deals, it's about building relationships, providing value, and maintaining your integrity. The allure of the startup world is undeniable: building something from scratch, disrupting industries, and the potential to become the next tech unicorn. But for every Silicon Valley success story, there are countless startups that fail, and fail fast. Starting a business is hard work. It requires long hours, unwavering dedication, and the ability to stomach uncertainty and risk. And even with all that, there's no guarantee of success. The risks are real: financial instability, competition from established players, and the constant pressure to innovate and adapt. Plus, the startup lifestyle can be all-consuming, taking a toll on your personal life and relationships. So, before you quit your job and pour your life savings into your startup idea, remember, it's a marathon, not a sprint. It requires a solid business plan, a great team, and a healthy dose of realism. Multi-level marketing, or MLM, has a controversial reputation. Proponents tout it as a revolutionary business model, while critics decry it as a pyramid scheme in disguise. The truth, as always, lies somewhere in between. MLMs can be appealing, especially for those looking for a side hustle or a flexible work-from-home opportunity. But the reality is that most people who join MLMs make little to no money, and some even lose money. The risks are real: high upfront costs, pressure to recruit friends and family, and the potential to be left with a garage full of unsold products. Plus, the MLM industry has been plagued by scams and unethical practices. So before you sign on the dotted line and start selling essential oils to your grandma, remember, do your research, understand the compensation plan, and be wary of any MLM that emphasizes recruitment over product sales. Angel investing, the world of high-net-worth individuals writing checks to fund the next generation of startups. It sounds glamorous, and for a select few, it can be a lucrative way to grow their wealth. But it's not for the faint of heart, or the light of wallet. Angel investing is inherently risky. You're betting on early-stage companies with unproven business models, and the vast majority of startups fail. Even experienced investors with a keen eye for potential can lose their entire investment. And let's not forget the barriers to entry. Angel investing typically requires significant capital, often tens or even hundreds of thousands of dollars per investment. Plus, it's a long game, with returns often taking years, if ever, to materialize. So before you start handing out your hard-earned cash to every entrepreneur with a pitch deck, remember, angel investing is a high-risk, illiquid asset class. It requires due diligence, diversification, and a healthy tolerance for risk. The world is becoming increasingly interconnected, and with that comes opportunities to profit from the global marketplace. Import-export businesses can be lucrative, connecting buyers and sellers across borders and capitalizing on price differences. But navigating the world of international trade is no walk in the park. It's a complex landscape of regulations, tariffs, and logistical challenges that can quickly turn a profitable venture into a logistical nightmare. And let's not forget the risks: currency fluctuations, political instability, and the ever-present threat of fraud. Plus, dealing with suppliers and customers across different time zones and cultures can be challenging, requiring patience, cultural sensitivity, and strong communication skills. So before you start shipping containers full of goods across the globe, remember, import-export requires careful planning, a deep understanding of international trade laws, and a reliable network of partners you can trust. Stock options trading. It's like regular stock trading but with leverage, meaning you can control a larger position with a smaller amount of capital. This can amplify your gains, but it can also magnify your losses. And that's where things can get dangerous. Options trading is complex, requiring a solid understanding of options contracts, pricing models, and risk management strategies. It's not for beginners, and even experienced traders can lose money, especially if they don't fully understand the risks involved. And let's not forget the time decay factor. Options contracts have an expiration date, and their value erodes as that date approaches. This adds an additional layer of complexity and risk to an already risky endeavor. So before you start trading options with your rent money, remember, it's a high-risk, high-reward game that requires knowledge, experience, and a disciplined approach to risk management. So, there you have it. 10 aggressive ways to potentially make a lot of money, but also 10 ways to potentially lose a lot too. Remember, there are no shortcuts to building wealth. These methods might offer quick returns but come with significant risks. Do your research, understand the risks, and consider your financial goals. Don't let the allure of fast money cloud your judgment. If you found this video helpful, hit like, subscribe, and comment below.